Hey everyone, it's Zach with Palantir Research. Palantir has proved themselves once again, in my opinion. Q4 and full year 2023 earnings are out, and they're better than expected for me, with some nitpicky items though that I still want to be a little bit iffy on. But it's a long one here because there's a lot to talk about, so let's just get into the results, the earnings call, and then my thoughts at the very end. You can see the earnings results and the highlights much easier on there, but I'll be using the presentation for the easy to read graphics. So GAAP net income first came in excellent and better than expected in my opinion, still growing. With their fifth quarter in a row, note the importance here for Palantir is that they are able to maintain and grow this while still in their growth phase, which I'll be touching on for revenue later. Now, for GAAP operating income, this is the real scorecard in my opinion, showing their business continues to be scalable and their sustainability as well to just thrive and thrive down to this. So no issues here and great to see them continue expanding operating income on a GAAP basis. So they really want to highlight commercial revenue, and this is exciting too and excellent in my opinion. 32% growth for overall commercial, so this is with the international, but breaking out US commercial, you can see the insanity here with 70% year-over-year growth for the quarter. This is mind-boggling to me. Now, remember, this means that international is still dragging here, but at this point, I think this is amazing to see here, and of course, we just want to keep doubling down on that. Now, government-wise, this is not a bright spot at all, and this was kind of expected. Overall, government came in at 11% year-over-year growth, with U.S. government only at 6%. So we're hoping this lumpiness will turn around if they are to win any large contracts, but right now the focus is all on commercial, and if you hear the call too, it sounds the same. And quick note, this is one of the good things about Palantir's business. They are able to hold the fort down at least, they're not decreasing at least at this point, and they are able to pursue other areas while they may be seeing this sluggishness from the government. So we'll see how this continues to perform over future quarters. Now, revenue-wise, beautifully, we hit that 20% year-over-year revenue growth overall for the quarter. This is a literal turnaround from the 17% last quarter, and we beat top end of 603 million guidance by 5 million more at 608. This is legit and much better than I expected, where I usually expect them to eke out at the top or just above their guidance. So good job Palantir on this one. And then for Palantir's top customers, we continue to see their top 20 customers continue to spend much more with them. We've got an 11% increase year over year on the average revenue per top 20 customer on a trailing 12-month basis, as well as their billings flying up 56%. And usually I don't draw attention to this, but Palantir's actually adjusted gross margin jumped up to 84%. We know they're a software company here. I mean, some may still argue they're a consultancy, but I didn't expect them to still juice and squeeze more out of this and expand it. So it's a very lovely graph and trend, even if it's maintained throughout in the future. Now, I think the tastiest chart here they gave is customer count. Look at the beauty of this US commercial first, 55% year-over-year growth, and that's a consecutive 22% jump, exceeding my wildest expectations. But more so on the overall customer count, they did not hit that 500 I wanted. I know that was kind of a stretch here, but look how close they got. And they hit that 10% quarter-over-quarter growth to 497, so at least that is going upwards. And I think hitting it like this, even if under 500, they got those revenue numbers to back it up here. So if you had low revenue numbers, you'd at least want to see very high customer, but here it looks like we got a good balance. So I think this scenario pleased the market here at institutions and retail alike, and we'll of course talk about the stock a bit at the end. Now, operating cash flow is big. Palantir is in no danger of bankruptcy. It's never been in the story, or even just taking on debt here because they produce so much cash. And this cash pile continues to grow from $3.3 billion last quarter to $3.7 billion, where they are just collecting interest on this for those treasury hoards and of course a little bit in cash. Now, I trust management still to figure out what to do with this cash over time. I'm not in a rush per se while interest rates cuts maybe even delayed, but obviously we'll monitor the situation as the environment changes too. But the level of financial safety in this company really can be shown at this slide. We just got to figure out that valuation though too. Now, the number of deals blew my mind. They hit 103 over $1 million this quarter, and this is up from the 80 deals last quarter. So the 5 million plus is a higher by 8, and then 10 million plus is higher by 9. These numbers exceeded what I thought would happen, so good job. Now, for net dollar retention, we hit 108%. So I'm happy we didn't see a further decline here. It's not the greatest thing ever, but either way, staying flat from last quarter's 107% is still good. Note, they did point out here specifically on the call that this does not include the acceleration that they're experiencing right now from US commercial, since it is, of course, for existing customers only, and these are new. And maybe they listened, but at least it wasn't lost in a big paragraph. And even though still it's very small in the additional metrics area, not really easy to see too, but understandably, it's not completely gone here and they're still providing it. Now, guidance-wise, I like the full year much better than the Q1, but for Q1 2024, they're expecting $612 to $616 million. This is about 16 to 17% year-over-year growth, depending on rounding from $525 million from Q1 2023. So the hope is that they're beating this because they're sandbagging it maybe, and we'll try to hit that 20% growth as a surprise, but either way, it's just something to keep note of. But what I think investors are forgiving for is that it's the full year also for GAAP operating income and net income are both here in that bottom line, so it's nice for that clarification from management and continue to prioritize this, as well as them expecting all quarters being very nice. But revenue for full year of 2652 to 2668, this is aligned to that 19 to 20% here depending on rounding. So that's why I think despite the low first quarter guidance, they are confident in accelerating back up again for the full year here. Maybe it's just a way for them to be safe just to make sure that AIP bootcamps are converting. And I think the nice bonus here is that the big adjusted free cash flow guidance of $800 million to $1 billion, very good here. This is massive and shows that Palantir is a cash generating machine and is going to produce more than they did for 2023. And we're only in the early stages here, so just imagine over time when these new customers start buying much more. But overall, the full year guidance here is going to get that attention over the Q1, as I mentioned. So now the earnings call. Karp opens up and touts these growth numbers and basically points out they are growing and are the go-to company for anyone with more than $1 million to go to Palantir. So operationally, AIP results are real, and Karp is saying this is scaling up like crazy. Karp is pointing out how US commercial is their strength, and he's optimistic around their USG, but obviously the results aren't reflecting that this quarter, but he thinks they'll follow. Now, demand also is off the charts, said Ryan Taylor here, with 103 deals over $1 million. This is a huge jump from that 80 that I mentioned from last quarter, and the AIP bootcamps are accelerating, and even says this is only the beginning, so they are still excited here. And Sham covers the FedStart question. The focus right now is still intently on IL5, with the end of Q2 here to bring IL6 onto FedStart, so for those who didn't know. And they also plan to do a UK equivalent too, so more expansion of this product/service intertwined with Apollo. And this is something I wanted to see here, just an expansion of how they can get more customers even outside the United States in kind of a similar manner with FedStart. So the value case is so obvious per Shyam's comments, and Shyam brings also Mission Manager, which has that combined offering to the government of Apollo and Ontology Software Development Kit, or OSDK, which keeps interface controls for the government here. So FedStart is a product launched on top of this, and I'm trying to see if this cements about their US Army trying to get away from vendor lock-in, and this kind of addresses that in a way, but we'll see if that's actually true. And then adding onto this though, Karp says they've been so aligned with their customers internally, even IT teams. So there seems to be positive working environments here with the customers and getting away from this adversarial relationship that has been touted in the past with IT. And Karp even joked about Analyst and getting them on board too. Now, Mariana, though, she's asked a question, and she was able to bring up that, the government business and how the DoD is changing the way they're buying and sourcing software, and she just wanted to know how this affects Palantir's business. And Karp reiterates they're welcome, even being able to prove on the battlefield-tested software, and he points to U.S. commercial like this is kind of a proxy, that they're growing with almost no sales force because their products matter, and they work, and they're proven. So he's thinking that it's going to carry over to the government side eventually. And then Dan Ives also brings up asking about the acceleration of AIP, and management says they're still early in from what they're seeing from customers and those conversations, and that to my delight at least, Karp brings up the AIP conference here, or AIP Con, but says they can't do enough for them and limiting the amount of people that'll be able to attend. So they are still highly targeting their audience here and potential customers, and if we are seeing numbers like this while that's going on, I'm optimistic as they continue to open it up. And Karp notes they're already overfilled for their AIP bootcamps and don't know how to deal with the demand here, rebuilding the company, and even telling German and French employees that come to the US so that they can double down on the United States market. We know that there's been issues there. So my thoughts on earnings though, and the earnings call are overall positive. I think everyone will tout that growth is turning around, and obviously they want more consecutive quarters like this, but we'll see how they perform. It's just good to get a slight win here, especially with the customer counts combined with revenue. Now, guidance, like I mentioned, the quarterly one is a little to me, but full year, it's a good start, being around 20%. Now, with Palantir past this, they've already hit high and exceeded their guidance, so maybe the market may expect this again for full year 2024, and we'll just have to monitor if they can actually hit that. And then you can't forget Palantir being a cash machine and just producing cash and continue to stockpile it for a rainy day and using it for something you can really generate a return on. I know they'll be cautious here considering they don't want to draw attention away from the narrative of growth and figuring out the boot camps here. But as noted though, even though commercial is the main story of the success, growth for the government side is a little bit low, so it's something you always keep in the back of your mind. And this transitions well to the call. The biggest comments, in my opinion, is that CARP is still touting they're reorganizing themselves around AIP, especially around commercial customers. And we know government can find its way eventually as long as their battlefield-tested software is working, but right now it just looks like the main focus is on those commercial numbers. Now, honestly, they were kind of softball questions, in my opinion, from the analysts, and those are bulls, of course, Mariana and Dan. So I would have liked to see a little hard-hitting questions here, but I think overall still a great call in showing confidence to investors like myself that they are trying to keep on growing. Then the after hours here for the stock, if you just want to look at it briefly, is up almost 20%, just around below $20 as of this recording. We'll see if this holds into tomorrow, though, for the official trading hours, but I'm obviously a bull, and I still think we are in the prove it phase for this year, but it's still a great quarter to me, and it's a great start to the year. Results are trickling in from their go-to-market strategy of AIP bootcamps, since customer count is really turning around for U.S. commercial and upticking on the overall side here. And we obviously had a good quarter, just hitting 20% for Q4, although now we know far from that 30% CAGR promise a while ago. So I won't be surprised if bears come out and bring up the past and scream valuation again, but there's something working here based on the numbers that I'm seeing. But just let me know your thoughts below on the overall quarter. But thank you for watching, and I'll see you in the next video.